If you've ever seen a rights issue, gotten excited, and then been told that you're not eligible, this video is for you. Let me clear this up once and for all because the number of questions I've gotten about this. Ooh, okay. Let's go into it. The rights issue is one of the ways a company raises capital from its existing shareholders, not new investors, existing shareholders. Now, think of it like this. You and your friend started a suya business together. I don't know why you see it. Maybe I'm hungry. The business is doing well, but you need more money to expand. So instead of looking for loans or going to find new partners, you go back to the same people who first invested in your business and you tell them, we're trying to raise more money. Do you want to buy more shares of this our business at a discounted price? That's basically what the rights issue is. You're buying the same shares you already own, like you're buying extra shares basically, bought at a discounted price. And it's only available to you if you already own shares in that particular company. That's just what it means. The company is giving its existing shareholders the first opportunity to put in more money and buy more shares before anyone else. Let me give you real Nigerian examples. For example, UBA raised 178 billion naira through a rights issue, not an IPO, through a rights issue. They offered one new share for every 13 shares held. So for example, you own 26 shares, you're eligible to buy 2 new shares at a discounted price. And only shareholders who were on their register as at July 16th, 2025 were eligible to participate in that right issue. Name-It Pharmaceutical ran a right issue recently. I was eligible. And it was only for shareholders who were on their register as of February 2nd, 2026. Suno Assurance ran a right issue too, and it was only available to shareholders who were on their register as of February 12th, 2026. So I hope you're noticing a pattern here. Every single one of these has a specific date attached. That date is the most important thing. So if you're trying to participate in a rights issue and the cutoff date, you were not holding that shares at that cutoff date, you shouldn't be wondering why you're not eligible. You were not on their registrar as at that date. Now, here's the part that confuses a lot of people. Honestly, that's where most of my questions have been coming from. Just like dividends, when a company announces a rights issue, there's a date called the qualification date or the register date. This is the cutoff date that the company uses to determine eligibility. So if you're not on their register as at that particular cutoff date, you're not participating in that rights issue. There's nothing you can do about it. You will not be able to participate. Now, this is where people get caught out. 2 things actually happen here, actually. You hear about a rights issue, you get excited, you want to participate. You rush and you go and buy the shares. But the problem is that by the time you buy that shares, the qualification date has already passed. Your name appears on their register quite all right, but it appears after the cutoff date. You basically own those shares, but you are not eligible for that particular right issue happening. For the next one, maybe, yes, you will be. But for that particular one, you will not be eligible. The second one is settlement. Remember when I talked about the T+1 settlement happening, like when Nigeria moved from T+2 settlement date to T+1? Remember what I said about trying to buy your shares ahead of whatever date you're aiming for so that it can settle, so that your trade can settle before that date? I don't know if you remember. If you didn't, go back to the video. That means that when you buy a share today, it settles tomorrow. You officially become a shareholder of that share the next day, on the settlement day. So if a right issue has a qualification date of today or tomorrow, and you're buying today, thinking maybe you've made it in time, you might be wrong, because you may still miss it even though the settlement date is tomorrow. What if it doesn't settle by the time the cutoff closes? Yeah. So whatever you do, and you're aiming for a particular date or time, buy your shares way before that date to avoid had I known. So what you just need to do is watch announcement date closely. If you miss the qualification date, you can actually buy the shares themselves. It's not like but you won't participate in the right issue. Basically, you won't be able to buy at a discounted rate. You buy at the original share. You can just buy more shares. No problem. And there's something called buying rights. You can buy somebody's rights. For example, the person doesn't want to participate, but they're eligible. On the NGX, shareholders can trade their rights through a dedicated rights trading code on the exchange. So it basically means that shareholders who do not want to cash in on their rights eligibility can actually sell them, and you who is eager to participate can buy their rights from them. But don't ask me, ask your broker. Your broker will tell you more. And finally, if you miss a rights issue, don't panic. A rights issue basically means the company is growing, they're expanding, they're trying to make more money. Do you understand? That's a positive signal. You can simply, for me that I don't like stress, you can just simply buy the shares in the normal market price and call it a day. I hope this makes it clear enough. Share this with your investment circle and drop your questions below. And as always, follow me, like, share to anyone who fancies content that revolves around the Nigerian and the US stock market. And I'll be seeing you in the next video. Bye bye.